when the market crashes, since so much has been bought on margin or bought on debt, right? Then if you borrow to buy those stocks and the stocks are plummeting, you're getting a phone call saying you need to pony up more money. Well, in those circumstances, you don't get to pick and choose necessarily what you're going to liquidate to come up with that money. So typically, it's the gold and the silver contracts that you're going to liquidate to come up with it. So that's not really the physical market. Let me come back to that in just a second. But also in all of those circumstances that you mentioned, when you look at how much stocks imploded to the level of implosion in those spot contracts, wasn't nearly what the stock market implosion was. So that's part of what tells you that that was margin covering. And yes, quite honestly, I expect to see that again because it's just an intangible digital asset. But at the same time, and this was true, again, in all those instances that you mentioned, if you're going in to buy physical, now your premiums are going up because that is a true demand and supply market. And, there's an unlimited amount of contracts and that those contracts are hugely leveraged. But in the physical world, if you're buying physical, that's what there is. And, you may not even have a choice of what you can buy, but you're grateful for whatever you can get your hands on. So I know a lot of people look at those spot markets and go, oh, well, that's how much gold is worth and that's how much silver is worth. But that's not true. That does not reflect the true value. It just reflects the current market value. The true value is what you see in a true supply and demand market, which sometimes are more and sometimes are less. But these can't go to zero. Physical cannot go to zero because of the broad-based demand for it. Those contracts actually do go to zero. Get it while it's there now. I just bought more. I will continue to buy more because there is no doubt in my mind as a technician and as someone that understands fundamental value, if you're looking at somewhere around $12,000 in true, in fiat terms, in true fundamental value of an ounce of gold for its most important function, or $700 silver, that is the true value that they're using those contracts to hide, because a rising gold price particularly is an indication of a failing currency. And if you really knew that the currency was going away, you'd make some different choices rather than holding it and trusting it for your future. So, I'm a buyer of physical, both gold and silver. And frankly, I'm mostly not able to get what I always like to buy, which are better dates and junk silver and things like that, because they're simply not available anymore, where we're holding them for our clients, so we can't buy them ourselves. But I've been able to get some common dates and some raw stuff lately. And so, yes, I'm buying at these levels. I'll buy all the way up. I don't really care because I know the true value. Well, really, I think we're seeing a lot of them now where, although actually, I wasn't around in 29, so I can't really speak to that, but it's always an extreme level of euphoria. And, as we're looking at these markets, we know they are Wall Street is completely disconnected from Main Street. And so the extreme valuations are definitely one of those patterns. Additionally, we see a huge division between wealth equality. And so right now, there is greater wealth equality division between the haves and the have-nots than there was back in 28 before that stock market crashed as well. Taking this further, because I I don't know, maybe I'm crazy, but I think it's really obvious these days that the entire global system is in the process of a reset. So, what we've witnessed over the last couple of days, I mean, why are the stock markets flying so much? Well, because of the Federal Reserve guaranteeing that they're going to come in and pump more money. And even as the markets were recently correcting, what did the Fed do? They came out and said, don't worry, there's going to be more stimulus, more stimulus, more stimulus. Well, we see the same kind of euphoria in those other two periods and even more. I mean, I was a new stockbroker on Black Monday in 1987 as well. And there was a lot of euphoria. There are a lot of these same things. But when we're going through a monetary regime shift, which is far bigger than a stock market crash, because even inside of a regular stock market crash, if the currency has some value to it, so you sell your stocks even if they're at a loss, but there's, you have some purchasing power there. This time, that's not going to be the case because we are inside of an entire reset. So all of the different rioting and protesting and the rise of populism and the breakdown of globalization and all of the civil rights movements that we're seeing, including the women's rights movement that we're seeing, these are all patterns that we saw in every single currency regime shift, whether it was the one in 1913, I mean, you had the suffragettes, etc., or again in 1971, and we're seeing that same thing again now. And they're working diligently on, well, not just a vaccine, but having all of the new tools in place to make this shift and control it. And the powers that be want to remain in control and they want to expand the globalization. We can see that in the World Economic Forum coming up, the Great Reset. And what I just had a fabulous graphic on it yesterday. Lots of parts of it are good, sound really good, really helpful. They want to do a lot of good things to clean up the environment, which I agree with really strongly. But the means that they're going to use to do that might not be in our best interest because it really is about taking us to a new level of control. There is that huge disconnect between Wall Street and Main Street. Something that they have in common was the liquidity provided by the banks and the central banks, which is the same thing now. That's why buy the dips.